I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day. Don and I have got a fantastic show. Jam-packed, in fact. Eddie Ghabour, he's back with us again today. He's co-owner of Advisors Group. We're going to be talking with him about the long bull run, and we discussed that with him back in August. We're going to find out where it's at today, plus the volatility that's out there in the market. What's going on there? Don and I have got a great stock list. Gamblers are on our list, and payment processors are on our list, forming some nice charts. You're not going to want to miss that. So we got guests, we got stocks, charts, news, and a whole lot more. Stay tuned right here to Traders Nation. We'll be right back.
Traders Nation. If you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation. Delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
It's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
That's right.
Yeah.
Hi, I'm Steve Forbes. You're watching Traders Nation.
Yeah, that's right. You can catch that. Yeah, Steve Forbes. You can catch that interview with Steve Forbes over at TradersNation.com or over our YouTube channel, of course. All right, Don.
There you go.
Yeah, Don, gambling win is on the top of our list here today. WYNN is the phonics for that one. Wynn Resorts trading at $106.20. 1.3 million shares exchanging hands here today, Don. Don, up $4 since we spoke about it last. Down a little bit from its highs, of course, but nonetheless up $4. Wynn's done a nice reversal. Check it out here. Third day reaching up for its 21-day moving average, Don.
Okay, on the gamblers win, the numbers out of Macau are pretty good. Of course, these are Macau-driven companies. Wynn, along with LVS, putting in a nice day today. These stocks, you're right, they're coming off their lows. Wynn has been trying to find a bottom in here, and the stock pops $8 today.
Sure.
And that's based on those numbers that are coming out. And, you know, I've been saying for a long time, as far as Wynn Resorts is concerned, nothing's changed with the company. I mean, Steve Wynn is long gone now, new management in place, and a very well-funded company. So no reason, in my opinion, why Wynn got pounded like it did, but here it is bouncing back.
Yeah, nonetheless. All right, so, yeah, I think you're right here, Don. I think some of these gamblers are starting to find their base. We'll see. You know, they've had this long, steady downward bias trend for at least a month or two, and just really painful for any long-term stockholders in these gambling plays. But nonetheless, I think they are trying to find their base here. Certainly, third-day reversal here today on Wynn. If you bring your charts up on Wynn, nice little green candles are going on. That's what I'm looking for. That's what I'm loving to see. So keep it on your radar here, Don.
Well, same thing on the LVS as well. And so these companies, most of the revenue now comes out of Macau. And, of course, these Chinese markets are growing rapidly, and they are expanding to other locales around the world. As an example, LVS, that's the symbol, trading at around $55.
Sure.
They've recently been approved for a project in Japan.
Oh.
So gambling is in vogue around the world and in many states here in the U.S., and so you got to keep an eye on these gambling stocks, although they are down off their 52-week highs.
Yeah, they totally are. They totally are. LVS, let's talk about that. Las Vegas Sands, Larry Victor Sanders is the phonics for that one, Don. Currently trading at $53.93. 2 million shares exchanging hands here today. Ditto, just like Wynn. Okay, man. It's going to be hitting its 21-day moving average here today, most likely tomorrow. If the buying continues to come into Las Vegas Sands. Hopefully today, most likely tomorrow is what I'm saying. Nice reversal. And that's what we're seeing on some of these gamblers, okay? MGM, let's go on to that one, Don. MGM Resorts currently trading at $27.42, a little bit less expensive than Wynn and certainly Las Vegas Sands. 1.4 million shares exchanging hands here today on MGM, up $2 since we spoke about it last. Third day reversal, same thing here. Bring your charts up on MGM, folks. Trading above its 21-day moving average and right into its 50-day moving average, Don.
Well, MGM, local business here. I'm based in Jersey, and MGM controls the Borgata in Atlantic City. Believe it or not, Atlantic City on the comeback trail.
Really?
But MGM is another one of these stocks. They have a huge operation over in Macau.
Yeah.
Of course, based in Las Vegas. They're right there on the Strip. But they control a lot of properties here in the U.S.
Yeah.
And here's a stock that's up substantially, trading at around $28 in here right now. So MGM is another one that you want to keep an eye on.
Totally.
And then, of course, moving on to another domestic company that just reported, Penn is on our list today.
Let's do that.
PENN. Take a look at the chart on Penn.
It's a beautiful thing. Penn trading at $23.83, rather. 2.2 million shares exchanging hands here today after dropping 2 times over the last several weeks. If you see this chart, bring this up, man. This thing dropped once and twice, and then here we are finally finding support right here in this particular area, $23.83, Don. PENN, Don.
Well, Penn's one of those stocks that just got caught up in the downdraft, in my opinion. I mean, look, some of these things, when these stocks get hit, especially the high flyers like when Las Vegas Sands, they just get creamed in the entire downturn.
Yeah.
And Penn is caught up in that cycle now.
Sure.
Stock got hit twice, like you talked about it. That was a $30 stock not long ago.
Right.
And they've completed their third quarter. Earnings are out today. They've done it again. Decent quarter. It's a slow but steady growth for Penn, PENN.
Okay.
Stock symbol on that, and this is a Pennsylvania-based company.
It is. Penn National Gaming is the name of the company. PENN. Once again, that's Papa Echo Nancy. Nancy is the phonics for that one. Hey, Don, now real quickly, you mentioned Atlantic City. I mean, you don't really hear a lot about going on. What's there in Atlantic City? Do you think it's like, you think they're going to be able to revive that area, Don?
Well, they're trying hard. Private investors have come in there. They've just reopened one of the largest hotels that has ever been built, and it is the largest hotel in Atlantic City. Just reopened, a beautiful facility, and of course, all the big players are in town except for Las Vegas Sands and Wynn, which I think is a mistake.
Okay.
But MGM is in there. They control the Borgata.
Yeah.
And Atlantic City is on the comeback trail. And look, it's a beautiful setting. It's just that the town needs a little work, but they are trying. And the Borgata, I've noticed that to get a room there, we've talked about this in the past on the gambling stocks.
Yeah.
Very difficult to get a room, and they can get full value for the room. So that's what's going on.
Yeah.
Yes, that's what's going on in Atlantic City. So,
Don,
well,
you and I both know they make really good money on those rooms, okay?
Yes.
It wasn't that long ago. I think it was in the first quarter of the year when had their conference call, sat in on it. And, man, they got a 50% margin on their rooms. Not bad, Don. I mean, they're making good money. So, they're making it in the casino, but, God, the money's up in the rooms and everywhere else in these places, Don. All right.
And by the way, I've seen this before with these gambling stocks over the years. They get clobbered. Wynn is another one. Been beaten down.
Sure.
Las Vegas Sands gets beat down. Las Vegas Sands pays a nice dividend.
Sure.
So Penn, I'm sure at some point will begin paying a dividend. There are others in the gambling sector, but these are the ones we're focused on right now for today.
Well.
So our viewers and listeners out there should keep an eye on some of these gambling stocks now.
And totally, Don. And one last note before we move on to payment processors is that, listen, you're saying, why are you covering these guys? They've been beaten down. Listen, you got to watch these, man. You want to buy them at the lows, right? You want to watch, and when they start getting towards their bottom and their bases, and you feel that they're at those bases, then you start thinking, okay, am I going to come in and am I going to pick some of these up? And this is a reason why we're covering some of these. These companies, these markets for these companies, they're here to stay, okay? And so we bring these to your attention, not only for today, but for potentially the future of what they can bring for you long term. Don, let's move on to payment processors. First one on my list here today is MasterCard. MA is the ticker symbol for that one. Currently trading $197.75 here today. 1.2 million shares exchanged in hands here today. Take a look at this reversal, third day today. Okay, nice reversal going on here today. Weak trading session though. Volume is low on MasterCard. Don?
Well, MasterCard, the leader in the trade, along with Visa, and we've got some others on the list in here as well. But the MasterCard putting in a decent day, and like you say, trading in here at around $198.50.
Sure.
Visa trading at around $140. Take a look at the chart on Visa. Now, here's a stock that's up almost $2 today, but these are stocks that get sold off. These are large cap stocks. They get sold off in any kind of downdraft where they hit the sell button first and ask questions later.
Yeah.
But these are the stocks that are always normally the first to come back when the markets come back.
That's right.
MasterCard and Visa.
That's right. Visa. Here's the numbers on it. $139.26 where it's currently trading at right now. 3 million shares exchanged in hands here today, up $3 since we when it finally found support and bounced off its 200-day moving average. Bring your charts up on this. Beautiful looking chart on Visa. Okay, Don, we're out of time. We'll finish with the payment processors on the other side. Okay. Coming up next, we got Eddie Ghabour. He's going to be with us today. We're going to be talking about the longest bull market run where we left off back in August. All right, that and a whole lot more. Stay tuned. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation, live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
We are. Welcome back. You are tuned into Traders Nation. My pleasure to have back with us once again Eddie Ghabour. He's co-owner of Key Advisors Group. Eddie, welcome back to Traders Nation. How are you today?
I'm great. Thank you for having me.
Sure. Always a pleasure, Eddie. So, Eddie, back in August, we discussed about the longest bull market run, if you recall. Where are we from there?
Well, I don't think this October drop that we've seen, this volatility we've seen, means that it's the end of the bull market. I don't look at October as the start of a bear market.
Yeah.
I think this is just a normal correction that we actually see in secular bull markets.
Okay.
It makes investors uncomfortable. But look, when you come off a year like last year, which was, I would argue, last year was not normal because there really wasn't a lot of volatility. Everything just kind of went straight up.
Sure.
2018 is more of a normal year in a secular bull market where you do see double-digit drops throughout the year.
Sure. All right. So what's causing the volatility that we're currently seeing right now? Especially, I mean, looking at the tech area, I think it is. Are we looking at the slow growth? Is there any slow growth, for instance, it's being reported out of Google and Amazon? Your thoughts?
Well, I think there's a couple things causing the volatility.
Yeah.
Number one is in the earnings calls that have been coming out. Earnings have been fantastic still, but they're putting some caution in regards to growth for 2019. And so you went from a market that had a very, very high expectation rate of 20-plus revenue growth, and now you're looking at companies saying, it may be 10% or 11%. I would argue that a 10% revenue growth is still a strong number.
Sure.
It's just, and the other thing I think you're seeing happen is I think you are starting to see some sector rotation. Value stocks have been underperforming growth for quite a while.
Yeah.
And so growth valuations got really high, and it was well overdue for a correction.
Oh.
The other thing that I think that you're seeing is concern with the Federal Reserve and how aggressive they're going to be in rates.
Sure.
Last time, Chairman Powell said that we were going to raise rates until we went to neutral, and we were nowhere near neutral. And that spooked the market because we don't know what neutral is.
Right.
And one thing the markets don't like is uncertainty. So I think you'll see the Fed's tone change a little bit in December, calm the markets down, and we will get back to our fundamentals, and we'll continue on this secular bull market.
Why do you think some of these companies are drawing back their numbers? Are they just being conservative in way of 2019? What are your thoughts on that?
It's a multiple of things. I think number one is they're concerned with rates. You know, when rates rise, that means the cost of business and capital is more expensive.
Yeah.
And secondly, I think there's some concerns in regards to the tariffs next year. You know, right now there's a potential 25% tariff on goods from China, as we all know.
Yeah.
And I think that's caused businesses to kind of say, hey, look, there are some potential dark clouds that could hurt some revenue growth next year, and those are the two things.
Right.
So if we fix trade and the Fed comes out with a more defined statement, the dark clouds are gone.
Yeah.
Off to the races again.
You think by close year end, the Feds may even give us a little bit more clarity when it comes to where rates are going to be?
I think they will. I think this October volatility and some of the concerns that businesses are starting to say, and you're seeing some cracks in the real estate market.
Okay.
I think they'll be very, very clear in their December statement as far as what path they're going to take next year.
Right. Okay. Hey, with the U.S. economic growth still solid, many companies are still growing their sales and earnings. What's going to help reduce the amount of volatility that we're seeing? I know we're talking about the Fed rate. We're talking about outlook into 2019. But I mean, economic growth is still pretty strong. Some of these companies they're loving the fact that we're getting back into a consumer economy, and they're kind of planning for that. Do you think that they'll continue to grow in 2019, Eddie?
I do. I think when you look at the labor market, I mean, the labor market is really tight, and we saw, 3.1% wages reported, an increase in wages reported yesterday. That's the highest number in 10 years.
Yeah.
So fundamentally, I can't imagine something, it would have to be something really drastic for this economy to stop on a dime and go backwards. So I still think we're going to have economic growth going into 2019.
Yeah.
And as far as volatility, I think investors need to kind of get to the mindset that volatility is here to stay. That's normal. One way you will calm the volatility down a little bit, again, is clarity on trade.
Yeah.
Once we get an agreement with China and the Fed statement. Those are two very, very big items that will cause some calmness in the markets.
I think we have a lot of real estate between now and then when it comes to our trade with China. I mean, there's some good news coming out here today in regards to this administration's had some really good talks with China. But that's just talks right now. I mean, we really don't have nothing laid out, nothing mapped out, if you will, something solid and tangible that we can go on. I think we got a long ways to go on that. Your thoughts?
I agree with you. I don't think that's something that's going to be solved overnight. I think China, with some of the stimulus that they've done for their economy right now because of their concerns, is kind of saying they're positioning themselves for a longer-term battle. So as an investor, I don't think you're going to find any closure on this by the end of the year.
Right.
And I think best-case scenario is sometime in the first half of next year.
Okay, let's move on to some investors, long-term investors. I mean, they need to protect themselves. I mean, they really do. Should they be rebalancing their portfolio if volatility in markets, if it makes them too nervous? Because you talked about that earlier. And some people, some cats are out there, they're nervous. And I don't blame them. Do they need to rebalance? What should they be doing?
You know, I think every investor shouldn't wait until the market has a double-digit drop to reassess their risk.
Right.
I think people really need to make sure that they clearly understand the risk and the potential losses on their portfolio.
Yeah.
And if they're uncomfortable with the risk that they're taking, then yes, they need to reevaluate and maybe become a little bit more defensive. I personally think proper diversification and rebalancing portfolios throughout the year, no matter what type of market we're in, is a really nice risk management strategy to kind of keep people disciplined.
Yeah.
Because my concern is if you're not rebalancing and now all of a sudden growth stocks make a big part of your portfolio, well, now you have an Amazon go down by 20% and that's one of your biggest holdings. That puts you at susceptible to quite a bit of losses.
Yeah, it sure does. So what are you saying? Maybe every quarter people should look at, the investors should look at their portfolio every quarter, every half a year, every month?
Every quarter. I think every month is overkill, but I think every quarter you should be reevaluating and rebalancing your portfolio to the allocation that you feel comfortable with from risk standpoint.
All right, and certainly have an investment advisor help them do that?
Absolutely.
Yeah. I mean, some people, they go on it on their own, but boy, I tell you what, they can get in the house of pain if they're wrong. And certainly,
well, I think the problem is, and I had a client sum this up the best, when you don't have a sounding board or a team to go off of, many times you can make an investment decision based off of emotion versus fundamentals.
Sure.
And anytime you make an investment decision based on emotion, it's probably not going to be the right move.
Yeah. How do you think we're going to finish up here in 2018 in way of the economy and the market?
So I think the markets are going to bounce back, and I think we're going to finish in positive territory for the year. So I think we have the potential to erase these losses we had in October, because I'm going on the premise that I think the Fed is going to be a little bit more direct in their message.
Yeah.
If they're not direct in their message, then I think you can finish in negative territory for the year. But I'm not gonna bet on that side of the trade.
Do you follow the retailers at all? You think the retailers? I saw some reports out there. The retailers and some of the big box stores are really going to have problems. It's like a make or break. It really is a make or break for them this year. It seems like it is every year, but it's like this year is really a make or break for some of these big box retailers. Your thoughts on them?
Yeah, that's such a tough space right now. I mean, you have the Amazon effect, and I think just retail is just a very, very tough business model to succeed in long term right now.
Yeah.
You're going to have to really have a niche market to be able to attract people to get foot traffic.
Yeah.
Now, I think retail sales in the holiday season are going to be very, very strong.
Okay.
Consumer confidence is really high. People are feeling very good about their job security, and usually when you have a scenario like that, you see strong spending in the fourth quarter, and that can help us with the Santa rally that we're hoping for.
Yeah, I sure hope so. All right, we're out of time. Hey, Eddie, where can we find you today? You have a website? Where?
Yes, Key Advisors Group LLC.com is the best place to look at us.
All right, folks, head on over there today. Key Advisors Group LLC.com. Key Advisors Group LLC.com. As always, Eddie, we do appreciate your time here on Traders Nation.
Thank you.
You're welcome. All right, stay tuned. On the other side, we got more stocks, news, and more. Stay tuned. Welcome back. You are tuned in to Traders Nation. We appreciate Eddie Ghabour's time here today. Hey, Don, real quickly, I want everyone to know about Pro Online Trader DVD. When we talk about these support and resistance and charts and signals and patterns and candlesticks, you don't understand what we're talking about. You need a copy of Pro Online Trader DVD. Get it today at tradersnation.com. Click on that More button, and you can get your copy. We'll have it shipped out to you right away. Priority. Hey, Don, payment processes. We've got a new IPO, STNE, Sam Tango Nancy Echo, currently trading at $29.22. Don, your thoughts?
Well, it's a Brazilian company, hot business, this transaction processing around the world. And here's another Brazilian company. Came public at around $26, I think, trading at $29 in here.
Yeah.
And they raised $1.5 billion.
Oh, that's a good start. $1.5 billion.
There you go.
Yeah.
Yeah.
Yeah, it's not bad, Don. That's not bad at all. All right.
Trading NASDAQ, and that goes along with the other pair we introduced some months back, PAGS.
Yeah.
Another Brazilian company, PAGS.
Let's talk about PAGS quickly. We'll shotgun it. Currently trading at $26.51. Best looking chart out of all of our payment processors at this point. Nice channels. Trade near its low of its channel here today. PAGS, P-A-G-S. Okay, there you have it. All right, we're out of time, Don. Boy, it goes quick, doesn't it, man?
It sure does.
I tell you what. Hey, Don, do you own any stocks we talked about here today? All right. And where can we find you, Don? Social medias?
Don McKelvey at Facebook, along with Traders Nation at Facebook and LinkedIn and Twitter. Don McKelvey at Twitter.
Twitter, Facebook, LinkedIn, all those great places you can find Don. Hey, we appreciate your time tuning in today. We'll see you on the next edition of Traders Nation.